Okay, so what does it really take for a global giant like Hilton to steer through these choppy economic waters while still, aggressively building its empire? And maybe more importantly, how do you measure real success when the headline numbers, well, they don't always tell the whole story?
It's a really fascinating puzzle, isn't it? Because, that surface level data, it can paint one picture. But once you start peeling back the layers, you often find something much more strategic, maybe even more resilient underneath.
Absolutely. And that's exactly what we're doing today. We're taking a deep dive into the latest earnings from, one of the world's biggest hospitality companies, Hilton. We're using their second quarter 2025 earnings call transcript, their Q2 press release, and also their 10Q filing. That's the detailed financial report they give the SEC. Our mission here: to unpack what happened, why it matters to you, maybe as a traveler, maybe an investor, and what Hilton thinks is coming next for travel and business globally.
Yeah, and what's really interesting here, I think, is how Hilton actually managed to beat its financial targets, even with some, let's say, unexpected shifts in those core revenue numbers. We'll get into their really aggressive expansion plans, too.
Yeah.
Try to understand why the leadership sounds so optimistic, despite what they themselves call noise in the market right now.
Okay, let's start with those big financial numbers from Q2 2025, because they do tell a pretty powerful story, at least about financial health. Hilton's adjusted EBITDA, that's, a key measure of core profit before interest, taxes, all that, it actually came in over expectations, over $1 billion for the quarter.
Right. And the adjusted EPS, earnings per share, that also beat the forecasts, came in at $2.20. Pretty strong.
And look, if you're a shareholder, this is significant. Hilton gave back $791 million just in Q2 through buybacks and dividends. Year to date, that's almost $1.9 billion. And they're aiming for around $3.3 billion for the whole year. I mean, that shows a real commitment to delivering value, right?
Definitely. But while those profit numbers look good, the top-line story, specifically RevPAR, revenue per available room, it's a bit more nuanced. System-wide RevPAR was actually down 0.5% year over year.
Which naturally makes you ask,
Right.
okay, how do you beat earnings if a key revenue metric is actually slipping?
And this is exactly where that noise factor, as they put it, comes in. The CEO, Chris Nassetta, he clarified this was mostly statistical, down to holiday timing, calendar shifts.
Right, like if Easter's in a different quarter compared to last year, that kind of thing can skew the comparison.
Exactly. So if you adjust for those quirks, RevPAR would actually have been slightly positive. So it wasn't really about demand weakening fundamentally. It's more about, temporary timing stuff in the numbers. That's a crucial distinction.
Makes sense. Okay, so looking geographically for Q2, where was the strength?
Well, continued strength in places like the Middle East and Africa, up over 10%, which is huge. And Asia Pacific, if you exclude China, that was up over 5%.
Yeah.
So that diversification, it's clearly a benefit.
It's softer elsewhere.
Yeah, softer trends in the U.S., down 1.5%. And China was down about 3.4%. That softness, particularly in the U.S., it kind of suggests maybe consumers and businesses are feeling the pinch a bit. Inflation, higher rates. It pushes Hilton to lean more on that global spread to balance things out.
Okay, that adds up. So with those bigger trends in mind, let's drill down into the specific travel segments. What about leisure? Individual trips?
Leisure transient, yeah, that actually grew 1%. They said it was boosted by comparing against an elongated spring break window. So basically, people were still prioritizing those vacations.
Okay. And business travelers, the individual ones.
That's where you saw a decrease. Business transient was down 2%. And they pointed to a few things. Those holiday schedules again, less government spending, weaker international inbound travel, and just, general economic uncertainty.
But wasn't there a slightly more positive sign hidden in there?
There was, actually, a surprising detail. Non-government business demand apparently showed a bit of a pickup early in Q3. So it suggests maybe, while the big corporate travel is still a bit cautious, maybe smaller business trips are starting to come back a little.
Interesting. Okay, and what about group business? Conferences, meetings?
That was roughly flat overall. Company meetings actually looked pretty good, which is positive for corporate engagement. But that was kind of offset by some softness in the big convention business and social events like weddings and parties.
But looking further out.
Yeah, here's an intriguing bit. Hilton saw positive momentum in leads from corporations, so more inquiries. And group bookings for 2026 and 2027, they're actually up high single digits.
Wow, okay, so that points to longer-term confidence returning, doesn't it? Companies planning further ahead again.
Exactly. So shifting to the outlook now, for Q3, they expect RevPR to be, Well, flat to maybe slightly down again, still feeling those holiday and calendar effects. But adjusted for that timing stuff, they think modest growth is likely.
And for the full year, 2025.
For the full year, they're projecting rev pair growth to be somewhere between flat and up 2%. They see things improving in Q4, driven by modest demand increases and just easier year-over-year comparisons. It's not, explosive growth, but it signals a belief in a gradual, steady kind of return.
Which brings us back to what the CEO called lifting up above the noise. He sounded really optimistic about the medium term the next few years. So given the U.S. is like 75% of their business, what's driving that long-term optimism? What are they seeing?
It's a really good question. Talks to their strategy, right?
Yeah.
The CEO pointed to several big tailwinds they expect in the U.S.
Wow.
Things like a more favorable regulatory environment, some certainty on tax reform finally, global trade policy settling down.
The macro stuff.
Right. Plus, continued healthy corporate profits and really significant investment across industries. Think about AI, AI-related fields, core infrastructure, and also reshoring, bringing manufacturing back, like chip plants. All that requires people moving around, staying places.
So if you connect the dots, all these things are expected to boost economic growth, right? And unlock more travel demand.
Precisely. There's apparently a high correlation with something called non-residential fixed investment, or NRFI.
Which is spending on.
Things like new factories, office buildings, infrastructure projects. Basically, when companies invest more in physical assets, it drives more business travel, more meetings, more hotel stays.
And there's another piece to this optimism, isn't there, on the supply side?
Oh yeah, this is a big one. Very limited new hotel supply is expected for the next few years. They're calling it a potential super cycle of low new supply. Partly because capital was tight before, limiting construction, and partly because all this recent market noise makes new projects harder to get off the ground.
So fewer new hotels opening means less competition for existing players like Hilton.
Exactly. It's a natural advantage for them.
And this vision really feeds into their development strategy, which seems incredibly aggressive right now.
It really does. They're seeing record growth. In Q2 alone, they opened 221 hotels. That's over 26,000 rooms, which is up 52% year over year if you exclude acquisitions and partnerships. Huge jump.
And that led to what, about 7.5% net unit growth?
Yeah, 7.5%, very strong. Plus, they signed deals for another 36,000 rooms in Q2. They're on track for high single-digit growth in signings for the whole year. This isn't just random, it's a systematic acceleration.
And the pipeline, the rooms planned or being built?
Also a record. Over 510,000 rooms in the pipeline. It's growing year over year and even since the last quarter. And what's key here, almost half are already under construction. So it's tangible progress, and more than half are outside the U.S. That really underscores the global strategy, chasing growth everywhere.
We're seeing a big push in luxury and lifestyle too, right?
Absolutely. They just celebrated opening their 1,000th hotel in those kind of higher-end categories. And get this, they announced plans for 3 new luxury and lifestyle openings per week in 2025.
3 a week. Wow. And speaking of icons, the Waldorf Astoria in New York, it's back.
It is. Reopened its doors last week after that massive renovation. The one Conrad Hilton himself called the greatest of them all. It definitely signals that strategic focus on the high-end market.
And the global debuts keep coming.
Yeah, really strategic market entries. LXR, one of the luxury brands, debuted in France and Paris. Tapestry opened its first spots in Northern Ireland, Turkey, Hawaii. Curio launched in Vienna, and their first all-inclusive in the Dominican Republic.
And looking ahead in that pipeline.
More big names in big places. Waldorf Astoria is coming to Helsinki, Bali, New Delhi. Nomads debuting in Singapore and Detroit, Canopy in Tokyo and Italy, Tempo in Canada, Tapestry opening in Saudi Arabia. It's not just adding rooms, it's putting high-value brands in key global cities and growing travel spots.
Okay, let's talk about conversions. That seems like a really powerful tool for them. Taking existing hotels and rebranding them.
Hugely powerful. And profitable. Conversions were over a third of their openings in Q2. Spanned 10 different brands. DoubleTree, which is already massive, hit 700 hotels globally, entered its 60th country.
But the real standout seems to be Spark.
Oh yeah, Spark is flying. They opened over 40 Spark hotels just in Q2. Its portfolio is now over 170 hotels in 6 countries, and there are around 200 more in the pipeline. They said it's now the highest market share brand Hilton has. Incredible growth for a newer brand.
And this plays into that fish where the fish are strategy you mentioned.
Exactly. It works so well when the market's a bit disrupted. I mean, think about it. If you run an independent hotel or maybe a struggling franchised one. And there's economic uncertainty, the stability, the marketing muscle, the loyalty program of a huge brand like Hilton suddenly looks really attractive, right?
Makes total sense. So they're leaning into that.
They are. 33% of their Q2 deals were conversions, and they expect that to hit 40% for the full year. It shows real adaptability in how they grow. That's a sign of resilience.
And they're still innovating with new brands, too.
Yep. They just debuted Live Smart Studios in July. That's a new extended stay brand, tapping into different travel needs, often more resilient ones. And they're hinting at launching several new lifestyle and maybe alternative accommodation concepts by the end of the year. Some designed to be conversion-friendly, too. That's all part of filling, as they say, white spaces in the market, serving every traveler and every stay occasion.
From luxury weekends to longer budget stays.
Pretty much. And add to that, big commitments in emerging markets. They plan to grow tenfold in India, triple in Africa in the coming years. That shows real long-term confidence in those regions.
So overall, with construction starts up 16–17% this year, plus that strong conversion story, they sound pretty confident about hitting 6% to 7% net unit growth for the year.
Yeah, very confident, which is frankly a robust pace given everything going on.
Okay, let's quickly touch on financial health. Debt.
As of June 30th, they had $11 billion in debt out. Weighted average interest rate is decent, 4.76%. And crucially, no major debt payments are due before April 2027. That gives them a lot of breathing room, flexibility.
And they've been managing that debt strategically.
Seems so. They paid off $500 million in notes that were due in May using their revolving credit line. Then in July, they issued $1 billion in new notes to pay back that credit line. It's careful maneuvering to keep interest costs manageable and push out maturities. Reduces financial risk.
And always keeping shareholders in mind.
Consistently. The board okayed another quarterly dividend, 15 cents a share for Q3, and they bought back 3.2 million shares in Q2, spent $755 million. There's still $2.8 billion left in that buyback program. That's a significant return of capital, shows confidence in their own stock price and future cash flow.
Finally, let's not forget the loyalty program Hilton honors and just overall brand power.
Huge assets. Hilton Honors now has over 226 million members. That's up 16% in the year. And interestingly, membership is now pretty much evenly split between the U.S. and international travelers. That global reach is massive for driving repeat business.
And the awards keep piling up, right?
They do. Named Most Valuable Hotel Brand, again, 10th year in a row by Brand Finance. Plus, J.D. Power recognized Hampton, Home2 Suites, and True as best in their categories in the U.S., and they keep getting named a #1 best workplace in various countries: Switzerland, Austria, Netherlands, India, Vietnam recently. Adds to over 70 #1 wins globally since 2016.
Which isn't just nice for employees, it's just a strong culture that probably translates into better guest experiences and brand image.
Exactly. That internal strength, it seems soft, but it really fuels external success and brand power, contributes to that overall resilience we talked about.
So wrapping this up, we've really navigated through the details of Hilton's latest deep dive. We've seen how they're kind of skillfully balancing these short-term market wobbles with a pretty clear, aggressive, long-term growth plan. It's definitely multifaceted, diverse brands, super fast development, that powerful loyalty program.
Yeah, stepping back, it feels like despite all the current economic noise, Hilton's core strategy really banks on a fundamental belief that the human desire to travel, to meet, to connect, it's not just going to endure, it's actually going to accelerate in the coming years.
Yeah.
Driven by those bigger economic and social trends we discussed.
Right. And maybe that leads us to a final thought for you, our listener, to chew on. Think about your own world, maybe your industry, maybe just your personal interests. What long-term trends do you see reshaping things, and how might those trends, those maybe subtle shifts, similarly unlock unexpected growth, even when there's plenty of short-term disruption and, well, noise all around us today? Something to think about.